Okay, one of the things about all the bubble talk that we hear from CNBC, from the financial media, from general media, from commentary on social media, you've got a lot of sort of grizzled veterans, so to speak, who are saying how investors nowadays are completely irresponsible. And of course, the sort of the monetary policy of the United States government, many other countries, is such that we're pumping up this incredible bubble of stock market overvaluation. And, that could be true. But to be kind of a rigorous investor, you have to at least cross-check this stuff. You kind of want to check, for example, what's the nature of the person who's saying that it's a bubble? One thing I've found is a lot of times somebody says it's a stock market bubble when the stocks they own aren't going up and everybody else's stocks are going up. So a lot of times this sort of bubble allegation comes from kind of cranky investors that are underperforming. You want to keep that in mind. Also, bubbles or stock market booms, they can go on for a while. And, we have to sort of adopt an epistemic humility about knowing when, is somebody going to ring a bell when it's time to sell? No. So we have to be humble about, we're not going to know when the end comes of a bull market. The other thing is that some of the best gains can come in the latter years or latter periods of an upcycle in the stock market. And so, it's always helpful to look back at the 1990s tech boom. And in 1999, the last full year of the tech boom, the NASDAQ, the main sort of market for technology investments back then, was up 100% that year in 1999. And in 2000, that NASDAQ market was up another 50% in the first 4 months of the year before the all-time high was hit, or that all-time high for that cycle. And so those are gains that you want to be in for as well. Like you don't want to just liquidate all your stocks and just get on the sidelines. You got to stay humble. And if you believe that the stock market is overvalued, okay, trim some things back, but also be okay with the fact that maybe you're wrong or maybe you're early to trim things back and you leave some on as well. So you want to stay humble about knowing that the stock market's overvalued. And you also want to be humble about what can happen because an overvaluation can sustain itself for a while. I think the other thing to think about is we're in this low interest rate environment, and it is true that there's this phrase TINA, there is no alternative, TINA, as a sort of a metaphor for why people are owning stocks who are allocating more capital to stocks than they otherwise normally would be, and that's because you can't really earn any return from cash investments or even bonds, because rates are so low. And so stocks with their dividend yields are actually much more generous as income producing investments than a lot of more fixed income and more safe cash-like investments. Well, that's still true, right? If a stock that pays, say, a 3% yield, if that stock doubles, the yield is actually going to drop to 1.5%. And then that investment starts to become a less attractive cash-paying investment. So dividend-paying stocks kind of heal themselves or take care of themselves in terms of their overvaluation. You can't actually have a dividend stock go to infinity and still pay a good return on your cash because the yield is an inverse function of the price of the stock. So in the dividend-paying sector of the stock market, you can sort of see if you're sitting around investments with, say, a 3% yield, 2 and change percent yield, and that's good enough for you, it may not matter so much what the underlying stock does, as long as you believe the dividend is safe and secure. So these are some different ways to think about whether we're in a bubble, whether you should react to kind of media reports that we're in a bubble, and kind of think about how bubbles can last longer than people expect. And you don't want to be one of these angry bears that jumps to the sidelines and then starts lecturing everybody else about how irresponsible they are, for not having sold as well. You kind of want to be humble about things and maybe peel stock off as stocks go higher and higher and, just to stay responsible. But you want to also leave some on because you don't know when this is going to end and how far it can go before it ends. So it's all about epistemic humility and not getting kind of scared out of stocks when we don't know really where we are in the cycle of the current bull market. Okay, I hope these videos are helpful. As always, thank you for watching.